It continues to decline down around 35-36% in last couple of trading sessions. Thank you, Vivek, for all those stocks that are in focus. So with that, we move on and talk to the first company on Midcap radar. Somany Ceramics posted a subdued second quarter, largely weighed down by weakness in demand. The company saw higher costs, hurting margin as well. Note that Q2 is a seasonally weak quarter for building material companies generally. To discuss this and the outlook going forward, we are now joined by Abhishek Somany, who's the MD and CEO at the company. Abhishek, good afternoon. Thanks a lot for joining us. Well, Q2 has been a weak quarter across the industry, and that is something you have mentioned in the press release as well. How are things right now? Because there were a couple of things which were hurting the industry. There was lower demand, raw material costs, especially gas prices were through the roof. Will the second half see some improvement, or will it be a while before things come back to normalized levels?
Yeah, you're right. We had a subdued quarter, and second half generally is better. A good year, bad year, generally second half is always better. But coming into second half, the first month has been muted, which was expected because October is generally just before Diwali. It's generally a muted month for ceramic players because nobody wants their homes dirty. This year was exceptional, where we had all the holidays together, Dussehra, Chhath Puja, Diwali, all of them happened in 1 month. So I think November started off better. The other salient point, which is a green shoot, is that the gas prices have come off. They've started stabilizing in the global market and also in India. As far as we're concerned, we moved about, it's work in progress. By about November end, about 60% of our production would have moved to LPG, which is considerably cheaper than natural gas. So from that point of view, hopefully margins should start looking better post-November and also early into Q4. So the raw material prices seem to be under check going forward.
So you're saying you moved from natural gas to LPG or propane? I just want to confirm that.
A couple of plants are on propane and the rest of them are on LPG.
Okay, so how much cheaper is it versus natural gas for you right now? And if yes, it is something that will keep raw material prices under check, what kind of margin improvement will you see in the second half?
So ballpark figure, about 64 rupees a standard cubic meter is the price of natural gas. Again, it varies from location to location, but I've given you a basket. And the price blended for LPG adjusted to the calorific value is about 52, 53. So it's about a 10 to 11 rupee per standard cubic meter difference.
Okay.
So that would definitely look better on margins. I can't give you any margin guidelines because there are variables of the other 40% of gas. We don't know how that will move. So I do believe that the volumes would start picking up and margins will also look better because at least 60% of the gas is under check.
Abhishek, afternoon. Rima here. So you expect volumes to pick up in the second half as traditionally they do, though October was a bit subdued. Could you help us with some numbers? What could be the volume growth for the full year? And last year, your volumes were about 57.9 roughly. What was the number in October and what should we expect for the full year?
I don't remember the October number, but I think we were about 10% down than what we would have envisaged early in October. But the approximately 57.5, 58 million square meters was the sales last year. We should be anywhere between 66 and 68 million square meters this year. So good gains as far as that is concerned from a volume perspective going forward.
Oh yes, that is because it will be an increase versus last year. So I just want to understand, when demand was not so good in the first half, you're expecting a substantial pickup in the second half. That means for you to reach that kind of volumes. And I had been speaking to Morbi Association as well, and they said even the export demand is not too much. For you, how do you have a substantial exposure to exports? Just want to understand. There is no exposure?
No, there is approximately 4%, 3 to 4% of our revenue is exported. But I think Morbi is going to see a lot of uptake in exports going forward from November till probably the whole of next year. I have 3 reasons to say that. Number one, freight rates have come off very substantially from India to Europe. Secondly, there's been an anti-dumping duty levied on Turkish companies into Europe. They were the large suppliers for Europe once the gas prices started going up. And the third reason is the gas prices have gone up so much in Europe that we definitely have become the alternate source for the European manufacturers to pick up material in their OEM names and also in for their distributors there. So all of these 3 reasons, you will see a large uptake of exports. And we're fairly sure that the last year exports was 12,500 crore rupees for this industry. And we are looking at anywhere between 17 and 18,000 crore rupees this year for export. So very big upsurge in export.
Interesting. Just getting back to the point about margins improving from here on, what's the outlook on the margins? Any number that you have in mind? And also on price hikes, I believe you've taken about 15% of hikes in the last 1 year. Now that commodity inflation is coming down, gas prices have significantly cooled from the high levels. Would you consider bringing down, lowering your prices to boost volumes and demand?
No, the last price increase we took was in June, July, and since then we haven't been able to take a price increase. Ever since then, the prices have gone up of gas very substantially. So we are still not at that mark. Therefore, we're still absorbing cost to that extent. So there is no question of lowering the prices. If the gas prices remain where it is now or even go down by another 5-7 rupees per standard cubic meter, I do believe that the prices would remain constant. If there is any increase, obviously, then we will have to look at it differently. But I doubt there would be an increase going forward.
All right.
And margin? Any number on the margins, Abhishek?
No, like I said, Rima, it's impossible for me to give you a margin because about 50-60% of my gas is at LPG and the rest of it is still exposed on the crude and also on spot. And we really don't know where that will go. Coupled with that, even the rupee dollar has become so volatile. It's currently range bound, but we've seen it going up to 84. But you never know what happens there. So I think it's largely dependent on what happens on the global scenario with the war. That could really make a huge difference between where we are now on rupee dollar and also on the gas prices.
Okay, too many moving parts. Take your point, Abhishek. Gas prices, crude prices, they have been quite volatile in the last couple of months. Thank you, though, for joining us and telling us what's happening in the industry and for your company as well. That's the word coming in from Somany Ceramics. Things will look better in the second half, they